Share screen. Share. All right. So when you're doing a buyer's closing cost or a seller net sheet, you're going to come here. So buyer's closing cost, you're going to go in, and it's going to take you into the screen. Now you can either do one of two things. Okay.
Okay.
We can create something new,
Okay.
or we can go into, what's up? You're in?
Yeah.
Okay, perfect. So we can either create a whole new one by putting an address in here, or go into an existing closing cost sheet that we already have. So just real quick. What's that? You good? I heard feedback on your end. Okay, perfect. So these are people that we're dealing with right now for on buyer side closing costs. That means we represent the buyers. Okay. Why do we need to do a buyer closing cost sheet? It's because of the regulations that our board of realtors tell us that we have to do. So we just can't rely on the loan officer to do the closing costs and that's it. They actually need information from us. And number two, with the debacle that happened in 2006 to 2008, they want the clients to have a second set of numbers to look at. And that's why when they go to settlement, they have an Alta sheet and a CD. All right. So if we wanted to make any changes in any of these, we just click this over here. But I'm going to show you how to do a brand new one.
Okay.
All right. You as the transaction coordinator are going to do this so you can make Art's life a little easier. You as the agent, you're just validating that the mortgage company is giving legit charges and that your buyer understands these closing cost charges, because you can't really validate they understand the closing cost charges given to the mortgage company because you weren't there. And they could have just said, I know, I know, I know. But by you doing this, you're now validating that they understand what their mortgage payment's going to be and what they're going to need at settlement. So this way there's no surprises, even though there's probably always going to be. So we're going to put one of our properties in here. Real easy to do. 252 Blue Ridge. Oh, yeah, Blue Ridge. Now it won't auto populate until you hit the search button.
Okay.
Sometimes you can get away with just putting, if it's not a common address, but if you have something like Main Street, you might have to put in comma, then the zip code. Of course, it's going to take forever. Come on, what's taking so long here? Taking forever. All right, I'm going to show you the other way on how to do this.
Okay.
Go to address. You look up the property address. 252 Blue Ridge. It already recognizes one. You're going to click results. There you are. You're pending. Okay. So what we're going to do is we're going to click on the MLS. And this is going to take us into the same screen. Remember how I was telling you about all the icons up here?
Yes.
You have your buyer closing costs here. And you have your seller closing costs here.
Okay.
So all you got to do is hit that. And look at that. It comes right up. Ugh. Oh,
Okay.
wait, maybe not. There we go. All right. So just like public records in the MLS, this is all going to automatically auto-populate some categories for you. Okay.
Mhm.
When you do a buyer closing cost sheet, you are going to need the good faith estimate in front of you. Did we go over what a good faith estimate is?
No.
Okay. When ARC gets somebody pre-approved, they usually go through the mortgage company, and the mortgage company asks them certain questions. You know, name, address, social, date of birth. They run their credit. But what they also ask them for is some important information like tax documents, bank statements, pay stubs, and stuff like that. So when they're compiling all this information, they put it in a database and they can determine what is the safe amount that this buyer can buy for and what type of loan's good for them and what interest rate is good for them. So a good faith estimate would look something like, let me see if I can find a good one. Medford River, Karen, Clover, Prospect, Norris. Give me 1 second. I'm just trying to get a pre-approval. Just give me 1 second here. Oh. All right, what I'm going to go right to is the CD. That'll have that. Should have had this right. I didn't even think about this. Cancellation. I have to settlement notice. Yeah. I'll need homeowners. Here we go. Perfect. Sorry about that.
Okay.
All right. This is what's called an Alta sheet. But what we're looking for on a good faith estimate, it's going to be something similar to this. Everybody has their own little design. They can use a Word document. They can use an Excel sheet. They can use something like this. There's so many variations of them. But what you're going to do is the mortgage company is going to be sending you over a list of charges that pertain to that client buying a home. Okay. So 9 times out of 10, you're only going to have the borrower. You're never going to have anything from the seller. Okay. So the first thing, when a good faith estimate comes over, they tell you what the sale price is going to be, or you're going to tell them what the sale price.
Mm-hmm.
So let's just say for today it's 300,000. All right. They're going to put a deposit down of 5,000. Okay. Deposit over here, 5,000. I want these numbers to match up. 179.9. All right. You can see both of my screens?
No, only the closing
What
cost.
screen are you looking at? Hold on, let me see if I can do this. I'm sharing. You can see my bright screen.
Mm,
What screen can you look? Which one are you looking at?
the buyer's closing cost.
The buyer closing cost from Bright, right?
Yes.
Okay, I need to switch this over here. All right, now can you see the document?
Nope.
Okay, let's try this. How about now?
Now I see the document, but only the document.
Okay, good. So I'm going to be going back and forth here. So when I get a document like this, it's going to be from the mortgage company. It's not going to have any of the seller information. It's going to have all the buyer's information.
Okay.
The list of charges and credits from the mortgage company that are going to pertain to the buyer buying this home. Okay.
Okay.
So we have a sales price of 179, and we're doing a $5,000 deposit, and we're getting a loan amount for 152,915. So if you go over to your closing cost sheet, are you kidding me? Where's my closing cost sheet? Tell me that erased it.
It's
Okay. 179. You see that?
yeah.
All right. There's my 5,000 deposit. Now I have to tell them what type of loan we're going for. So we're going to go for FHA. You're going to click the box that says conventional.
Okay.
Go to FHA. Just manually. 3.5% down.
Okay.
Now, why did it tell me my base mortgage is 173? That doesn't make sense. All right, so it's a sheet. My base mortgage. Oh, I'm putting down more money. That's why. Okay. So 152,915. 9 times out of 10, this computer is going to do it for you.
Okay.
152,915. 152. 152,915. All right, perfect. So this is the loan amount I'm going for. All right.
Okay.
The next over here is our taxes. All your taxes, don't worry about putting them in from the mortgage company because your system's going to auto-populate that. All right. Title, same thing. You don't have to worry about any of those charges. They're going to auto-populate over onto the but I want to get down to the mortgage closing cost. All right. So you're going to get two deed recording costs. One is from the title company. This $80 is for the title company to charge the buyer to remove the seller's name and to put the buyer's name on title and record it. The 180 is from the mortgage company charging the buyer to put a lien on that deed. So this way, in case they sell the property, they have to acknowledge that there's a mortgage on there. So that's 80 and 180. And you're going to go down to here, 80 for the deed recording.
Okay.
And the 180 for the mortgage recording. Do you understand how I did that?
Yeah.
All right, perfect. All right, back to the Alta sheet. And looking for any other charges. All right, so when you're reading this, this is from title company, don't care, title company, anything that doesn't say the mortgage company's name is title company. And that is it. All right. So what happens next is when you're what's a closing cost sheet at? Sorry about that. Technology.
Yep.
All right. All right. I'm trying not to click this. It's not letting me give full screen. All right. So we're going to start off at the beginning. We got all the mortgage companies charges in here. Now there's going to be a couple other ones, but sales price, you're going to need to know that from Art or when you're putting that in. Settlement date. That's a date that you guys are going to pick on the, it'll be on the contract after it's signed. So let's say it's October, let's say it's November 12th. You can put the buyer's name in here. That's fine. You don't have to.
Mm-hmm.
The interest rate. What interest rate are they getting? So say they're getting 3.2. If there's any seller's assist, how much they're putting down. You do not have to worry about any of this information. It auto populates.
Okay.
Okay. What type of loan they're going for? FHA, cash. They don't need a loan. They're going conventional, USDA, and VA. Okay. This will be on the pre-approval, but it'll also be on the good faith estimate.
Yeah.
All right. This information for right now, don't worry about it. But you can change this when they have an FHA loan or a conventional loan that has mortgage insurance on it. You can eliminate that.
Mm-hmm.
All right. Closing cost. You're going to see origination mortgage closing cost on there. This is on the list of the, when you look at the good faith estimate, it's a list of charges from the mortgage company.
Yeah.
You just have to make sure they all go in here. The titles, the subjects are not always going to, they're not always going to match. So there's going to be some where you're going to change where you see them and it's only $14 compared to $25, or they might not have a, let's just say they have a, what's a good one? Let's say they have, I don't know. I'm just trying to think of a charge on here that's not on here. We're just going to call it a bogus charge. So you're going to go down here and write bogus charge. And then you're going to hit, is it unpaid or is it paid? It's always going to be unpaid. And then you're going to put in there $200 or whatever it was. Okay.
Okay.
The paid and the unpaid represent, did this person pay for this before they go to closing? Okay. So what would be some items that a buyer would pay for to buy the house, but they paid for it before closing? And the reason I'm asking you is because you just bought a house.
And what I paid for the inspection?
Inspections. Inspections is a great one.
Yeah.
If you paid for it, then why do we need to put it on this sheet? The reason for this is because we have to be detailed. We have to let them know what they paid for the house. Everything has to be on there. And that's why we have paid and unpaid. The paid is actually, even though we're charging them for it, it's going to give them the credit. So this way they can see the charge, but they're not getting double charged for it. All right. So the appraisal, this is something that's going to be prepaid. When they get past the home inspection phase, they have to pay. It's going to be about $400, $450 to the mortgage company. Credit report, document preparation. This could be any paperwork fee. You can change this amount. You can include 3 categories and put that in here. That's fine. Flood cert, courier fee, wire fee. These are all charges that are on there. And if you need to add any, you just put them in here and then you can add additional fees. You can put as many columns as you want.
Okay.
Now, once we get to the second column, this is going to do the work for you. Okay. In Jersey, rule of thumb is buyers never pay transfer tax. Okay. So this is always going to be 0. All right. Deed recording and mortgage recording, we already went over.
Yeah.
notary fee, commission paid by buyer. Do not fill this in unless instructed. Now, Keller Williams, different Keller Williams has different things. If Art is charging a conveyancing fee or a broker service fee, you can either do it one of two ways. You can put it down here, broker service fee, unpaid, and then whatever it is, or you can add it in as commission paid by the buyer and put it there. So it's either here or down here, either one you want. Homeowners insurance. You want to click unpaid and then put the amount in there. Now, how are you going to know the insurance? Well, when you're first doing this to get an estimate, rule of thumb is if they're buying if they're buying a condo, it's under $500. If they're buying a twin or row home, it's usually about $900 to $1,000. If they're buying a single family property, it's usually about $1,200. This is just rule of thumb stuff. But when you actually get the figure from the buyer, agent, or the insurance company, then you can put that in there. But if not, you're just going to write $1,200. And like I said, this is an estimate, but at least I'm more concerned with you putting the topics in rather than getting the fees 100% exact if you don't have them in front of you. Now, home inspection, you're going to know the price because you're going to be setting these up. So home inspection, let's say it's $350, termite was $75, and these were all prepaid, and the home is unpaid. Radon inspection, water inspection, septic inspection, attorney fees. Again, these are all charges. So if the buyer decides to get a radon inspection, put that in there. If there's a well inspection, chances are that the seller has to pay for that. So you don't have to worry about that. But let's say the septic, the buyer has to pay. That's got to go on there. You will never have to put an attorney fee on there. No attorney in their right mind is going to give you their fees to put on your estimate closing costs. If we were buying a house that was in a condo association or a homeowners association, it would auto populate here, but it's your job to double check to make sure it's right. And then, like I said, any other charges you want to put in there, that's fine. Now, your system is going to automatically put these timelines in here, but you can change them based on what your good faith estimate says. So in Philadelphia, it's common that we take 12 months of property taxes. But as you know, in Jersey, the taxes are a lot higher than Philadelphia. So they don't require their tax bill to be paid yearly. They have to pay it quarterly. So rule of thumb is when you buy a property in a certain area, the mortgage company wants to see about 14 months of reserves paid for. So this way they can build up your escrow account, just like you have. But in the counties, they don't need that much. And also in South Jersey. So let's just say they only need 4 months. Okay. All you have to do is go over here and see how many months that they're collecting for, whether it's 4 or 3. School, let's say we're doing 3. Homeowners. Yeah, because homeowners is always going to be 2 in there. Now you see how the amounts changed?
Yeah.
Okay. Buyer reimbursement to seller. You're not going to change this unless you can see that the dates are 100% wrong. So they got billed from this date to the end of the year. If they didn't get billed for that date, then these have to be erased. But if this seller paid the taxes already to the end of the year, these are the amounts that they have to be reimbursed. All right. So if you go up here and you hit preview, now you have your closing cost sheet. Okay. All right, get out of there. As an agent, this is the best way you're going to explain this. All right. This is the first category right here.
Mm-hmm.
The buyer's name. This is the property they're buying. This is where it's at. This is the type of loan you're getting.
Yeah.
This is how many years. This is your interest rate. Settlement date. This is what you're buying the property for. This is your down payment. Here's your mortgage. And this is the mortgage insurance. Mortgage insurance, when it's FHA, it's called MIP. And when it's called, well, no, I think it's actually called PMI. MIP is what conventional. I could be wrong on that though, but either way, they come out to the same formula. They're charging you interest because you're a high risk buyer and they want to make sure that you don't default. So they take an extra insurance policy on you. So in case you do default,
Mm-hmm.
you're going to have 3 categories: 1, 2, and 3. Each category ends with a number in bold.
Okay.
All right. The first one is strictly by the mortgage company. These are all their closing costs that pertain to them buying the house. Any discount points, appraisal, and as you see the POC there, which means it was paid out of closing. Okay.
Okay.
So even though this $450 is on here, it's going to be added in as a credit down here, and I'll show you. So you got credit report, mortgage insurance, documentation fee, all their fees. And if you add all that up, it comes out to $3,630.73.
Mm-hmm.
Then you have the title policy. The title policy, these are charges strictly from the title company. And they base their prices on the sales price of the house. So you don't have to do any calculations, anything. The title company just needs to know the sales price and they can determine what the policy is going to cost them.
Mm-hmm.
Right here, $19.29. Now, this is other miscellaneous charges that pertain to them buying the house. These are fees. These are not, they're not paying in advance for anything. These are strictly fees for services rendered of what they got done. Now, again, transfer tax. You're not going to see that in Jersey on the buyer side, but you will see the deed recording and the mortgage recording.
Okay.
They're right there. Notary fee, homeowner's insurance. And as you see the inspections, they have POC after that. So if you add these 3 numbers together, so we got one over here at 450.
Mm-hmm.
We got one here at 350, which equals $800. And then you add another 75, that's 875, correct?
Mm-hmm.
All right. So if we scroll down here, guess what we see? 875.
Okay.
Anything in red is actually a credit or a loan. Okay. All right. So bottom line for your closing costs is going to be $39.19. If you add all 3 of these together, you get this number right here. This represents your total closing cost of fees and services to buy this house. This is an amount that you can use for seller's assist if we're in that type of market. All right. These are the 2 other categories that will make up your settlement closing cost. You have to have an escrow account. Do you know what an escrow account is?
Yes. Where the client's money go.
Exactly. Where the mortgage company doesn't trust you. They want to make sure your homeowners is paid, your insurance is, your mortgage insurance is paid, condos are paid, taxes are paid, because these are ways that the mortgage company can lose the property if you're negligent.
Mm-hmm.
So however many months that's on that good faith estimate, you're going to put that in there, and that's the total there. Now, if the buyer has to be reimbursed for anything like property taxes that they've already paid, it goes from the day of settlement all the way to the end of the year. So he's being reimbursed 1 month and 20 days for his county taxes, municipal taxes, school taxes, condos, and that's it, the amount right there. All right. I know you probably have a lot of questions. Any questions from anything we just went over?
Can you go back to the taxes, like with the months?
Perfect. So the mortgage company in South Jersey, they're 9 times out of 10, they're only going to collect quarterly taxes. So quarterly taxes, it's divided up into 3 months, 4 times out of the year. So you got January, February, March, you got April, May, June, July, August, September, October, November, December. The mortgage company has to make sure that the taxes are paid. So when you get a tax bill, when you, the buyer, get a tax bill in the mail, you're not paying it if you have a mortgage. If you have a mortgage, most likely the mortgage company is going to make the payment for you. Well, you're probably saying, hey, that's nice of them. All right, great. Well, no, because they're taking money from you right here, real estate taxes,
Mm-hmm.
and they're taking that money, they're billing you and putting that in that account. They're building this account up. But before they can build the account up, before they can start the escrow account, they have to bill you at settlement for this escrow account. So they're saying to themselves, you know what? I'm comfortable with only collecting 1/4 taxes or just 4 months. I just want 4 months of taxes. They're billing you based on the tax bill divided by 4 months.
Mm-hmm.
That's what they're collecting. So they're building this up. So even though your taxes are paid up when you go to settlement, your taxes are actually going to be paid up for the next 4 months.
Yeah.
You see that there? All right. But you're saying to yourself, well, wait a minute. If I'm being billed 4 months ahead of time, why am I getting billed then for this, for the next month mortgage payment? The reason for this is because when you look at your monthly payment, a lot of people don't realize this. Your principal and interest, you're paying for this month. So that's correct. So if we're in October 1st and your mortgage payment's due today, you're paying that for today. Real estate taxes, homeowners insurance, mortgage insurance, they are being put into the escrow account. All this money here is being put into that account. And you're saying to yourself, well, why? Well, when these quarterly bills come in, they're not due monthly, they're due quarterly. So the mortgage company has to make sure there's enough money in that account to pay that bill at once. So they're actually billing you now for this to pay for it later. Okay. So when you settle, you get that whatever money's left in that escrow account. When you sell the property, you get that money back.
Oh, okay.
All right.
Okay.
All right. This is where I'm probably going to lose you a little bit, but we'll see. This is the cliff notes of everything we just went over. And I threw a lot of categories in here because I wanted for you to see everything. Okay.
Mm-hmm. Mm-hmm.
All right. Purchase price, $179. We already knew that. All
yeah.
Right, $179 right there. Okay. Closing cost, $9,478. That's right here.
Okay.
That was the total of these three amounts. So we got that there. Your escrow account, 1806. Well, that's right here. We went over that. Okay.
Yeah.
Reimbursements to the seller, 2864. That's right there. So the total amount, even though I put a bid in for 179,900 and I got that accepted, I'm actually going to pay $194,049. Now, the reason I'm breaking this down is because you're going to be an agent one day and you got to be able to explain this. But as a transaction coordinator, you still have to understand how they're coming to these figures in case a client is calling you and you need to explain this. Okay.
Yeah.
The red is always credits, whether it's in the form of a deposit, a credit from the seller, a gift, or a loan. Base mortgage, 152,915. Yep, that's what we're going for. 152,915. That's what we applied for.
Mm-hmm.
All right. We got mortgage insurance. So even though they're billing me for the mortgage insurance, this mortgage company's like, hey, we're going to be nice enough. We're going to put it in a loan for you. So we're going to bill you for the insurance so you don't default. But we're going to put that in the mortgage for you. So yeah, really nice guys. So the total amount of credits that you're going to get for this property is 155,000. So that 155,000 gets subtracted from the 194. There's another credit that can go in there. You can put all kinds of credits, but your most common credit that's going to go in there is going to be your seller's assist. So when you get into a buyer's market, you're going to start seeing that. That is when the seller is taking their proceeds and helping the buyer out so they can pay for some of this closing cost. The only thing a seller assist cannot go and help is for this amount here. The buyer has to show that money in the account, minimum. All right. So if you subtract this amount from here, all right, the buyer has to come to the table with $38,458. Oh, wait a minute. Mike, I gave you a deposit for $5,000. Oh, yeah, that's right. It's right here. Okay. Well, Mike, what about the stuff I already paid for, the home inspections and the appraisal? Oh, yep, forgot that. That's right here. So your new amount that you're going to need at the table is $32,583. So part of your homework for tomorrow, I want you to ask Art for a deal that you're working on or that you have worked on and ask him for a good faith estimate.
Okay.
So what you're going to do is you're going to get that good faith estimate.
Okay.
You're going to get that agreement of sale and you're going to put that into to see if you can get close to it. Now, don't worry about, I mean, if you're lucky, you'll get to the right penny and you should have it, but don't worry about it if you're off. Where you're probably going to be spot on is the mortgage payment. So I want you to compare what you got, what they need to bring to the table, and then what their monthly payment's going to be. This should be spot on because if you have the sales price, you have the interest rate, you know the property taxes are there. You have to look on the good faith estimate to see how much the mortgage company is going to charge them for the insurance. And then you have to, this should auto populate. Now, what I'm hoping for that this is going to be different from what you get on your screen, because then I can show you how to change it.
Mm-hmm.
All right.
Okay.
All right. That is a buyer's closing cost. A seller's closing cost is a lot easier. But once you get this buyer closing cost, it's going to be like, I don't know, it's just going to come normal to you.
Mm-hmm.
All right. So let's see if we have a better time on this one. Come on, financial. Seller net sheet. So just like the seller net sheet, or just like the buyer sheet, I can go in here and go into load. I can click load. And I can see all the sellers. I can go into Silverwood, click that one, and go ahead and change whatever I want because I filled all this out before. All right. But let's say we have to do a new one. Okay.
Mm-hmm.
We're going to go into, oh, no, sorry. Seller net sheet. All right. We're going to go into 252. Oh. Man, it just does not want to work today. All right, let's do this. All right, same place we were before, buyer closing cost, seller closing cost.
Okay.
Hit that. All right, so we're going to kill two birds with one stone because I have to do one of these today for my admin. All right, name pops up, which is great. Address, all the information I need. Okay.
Okay.
You don't need to do anything here. It's very rare that this will be blank. It auto populates.
Mm-hmm.
But there's some things that's not that you're going to need to put in. Settlement date. It wants to know when you're going to settle. So on my sheet here, it looks like we're going to settle on cash commitment date of agreement. settle. We're going to be settling in November 14th. No, 15th. All right, 15th. All right. All right, this has to get changed. All right. The next one is sales price. Does that match up with the property, with the amount that the listing agent has listed? If it doesn't, all you have to do is change it. But on this one, it does. We're actually selling this property for $300,000.
Mm-hmm.
Now, you have to know if there's any mortgages on this property. Okay.
Mm-hmm.
So mortgage amount, let's say on our sheet, oh, that's actually it. I must have did this one already. So how do you get the payoff amount? When it comes to the TC, when it comes to you being a transaction coordinator, you're going to reach out to the agent. You're going to reach out to your agent, Art. Now, he might say, hey, do me a favor, call the client. If you have to talk to the client, you're basically going to say, hey, go find your recent mortgage payment. It doesn't have to be exact. What you're trying to do is give them an estimate net sheet of what their house is worth. Okay. So let's say they're on the phone with you, or Art sends you a text picture and it says $195,246 for principal. Put that in there. Okay.
Yeah.
All right. Why would there be a second mortgage and a third mortgage on there? One could be an equity loan. They can have another line of credit. Any mortgage or any lien that's attached to the property has to be put on there. So let's say 5 years ago, they did one of those home equity loans for $7,000. Put that on there. Okay. Seller's assist. It could go by percentage or it could go by price. So you're going to be looking at your sheet to see what's on there. So when something goes under contract, it's already on here. But let's say Art needs this for the listing appointment. You're not going to put a seller's assist in there. So when you're updating your seller's assist, when you're updating your closing costs and you have a seller's assist, just go ahead and put that in there. All right. His commission goes in here. You can put the broker service fee here or down here. Did you see that?
Yeah.
Okay. All right. That's it on that category. Let's scroll down. This will auto-populate for you. Your taxes that you already paid, county, municipal, school, HOA fees, if this was an HOA property, condo, sewer tax, trash tax. But let's say, hey, you know what? There is something that they pay for. They pay for a annual curb appeal assessment from the association. You can put that in there, put the name, whatever it is, when they paid it, and the dates, and it'll calculate it for you. I'm going to be honest with you. I've been doing this probably for about 20 years, 20 plus years. I've never changed any of this stuff. Never.
Okay.
All right. Okay. I was wondering because we're doing Jersey. All right. So Jersey's different. Jersey over here, when it comes to transfer tax, it's 0.075 something. It'll come up. You don't have to change this. You don't have to do anything with this. It'll change. There is one inspection that the seller is responsible for, and there's many, many names for it. On this sheet, they call it the municipal use and occupancy. You'll never hear that term in New Jersey.
Yeah.
It's called a certificate of occupancy. It's called a township cert. It's called a fire marshal cert. They have all kinds of names for it. Okay.
Yeah.
Always put $165 here. Okay.
Okay.
So in the beginning, when you're doing this for his listing appointment, it's always going to be 165. There is no county in New Jersey that we service that is higher than 165. If it's cheaper, they'll get a credit. they'll put it, but we're not going to bill them for the 165. We're just going to let them know that most it'll cost you is 165. The reason for this is because some townships it's only 50, some townships it's 125, but there are that's 165. All right. Settlement fees. This is always going to be blank unless Art tells you. Release means if there's an old mortgage that they have to research and the title company is going to charge them extra for it, that goes in there, but you're not going to put that in there unless told. The only time you put the termite inspection in here that is paid by the seller is if the buyer is a veteran. So there's this common thing that goes on that if you served, you do not have to pay for a termite inspection. You still have to pay for your home, your well, and all that. But for some strange reason, a termite inspection is paid for by the seller. Is it mandatory? No, it's not. But it was just common practice for probably for the last like 30, 40, maybe 50 years.
Okay.
Notary fee. It's $40 max per person. It can range anywhere from $20 to $40 per person, whoever's signing its settlement. So if there's one seller, it's $40. If there's two sellers, it's $80. And that is the fee to the title company to notarize the signature. Broker service fee, whatever he puts, again, you can put it here, you can put it here. You just can't double dip and put it in both spots. All right. Certifications, I like to leave this 0, but I take this 100 and I put it down here and I'll show you why. Attorney fees, you're never going to put that in there. Express shipping. The max amount is usually $50. This is a fee that the mortgage company is going to charge the title company to order a mortgage payoff. So if you have 2 payoffs, you're going to get 2 charges. So when they send a mortgage payoff over to the title company, it's usually good for about 15 to 30 days. But for that service, they charge for it. And then the title company passes it right off to the buyer. Home warranty. If there is a home warranty, Art will let you know and he'll let you know the amount. Most likely because you're going to be the admin, you're going to set up the home warranty. So he might negotiate for his buyer that, hey, besides the $2,000 I'm getting and the repairs I'm getting, I'm also getting a home warranty. So there's a couple companies out there, HMS, American Home Shield. I think it's called Century something in America. There's a couple of them. Basically, you go onto their website and you order a home inspection. Usually it runs anywhere from $395 all the way up to $700, depending on what's covered. And then that amount goes in here. But let's say I represent the seller. Oh, yeah. Well, the seller will pay for it. So if somebody's representing the buyer and they're making the seller pay for it, you're going to look at the invoice and you're going to put the amount right in there. All right. The last one here is certificate of resale, where I told you that we take this 100 and put it over here. Your certificate of resale is the seller is responsible for bringing the new deed to settlement. So that's why we always have 2 companies, 2 title companies working on the same deal. The title company that represents the buyer, they take care of all the buyer stuff. They run the policy to make sure there's no liens on there. They put the mortgage on the, on the deed. They record everything. They're responsible for all the searches. Well, the seller side title company can also order the inspections. They can order the mortgage payoff. They can order the condo docs, the resale docs. But another thing that they have to do is create the new deed. So a lawyer has to draw up a new deed with the buyers on there and removing the sellers. And he usually charges anywhere from $90 to $150. So I usually put $150 on there or $100. And you put that in there. All right.
Okay.
All right. And let's say you want to create some kind of fee. Let's say the sellers are out of town and the Art has to order the township inspection, but the township inspection needs to be paid that day for it to be ordered. The seller's on a vacation. Like, that's fine. I'll pay for it, but I'm going to bill them. So he's going to put in there township inspection charge, and it's going to be 120. Now you can either do a charge or a credit. Let's say the seller sold some of his furniture to the buyer. The buyer is paying $500 for some furniture. So you can actually make that a credit and put that in as 500. See that? This will never happen because it'll never be on the HUD. The mortgage company will never allow it, but this estimate sheet is strictly between the listing agent and the buyer. So again, when you go up there, when you hit preview, it's going to give you the same screen that we had before, except there's, only one column for figures.
Okay.
So unlike the other one, the buyer closing cost sheet, we start in the plus. We start with credits.
Yeah.
All right. Oh, I'm sorry. No, these are minuses. Okay. We start off with the minuses first. So unlike the buyer one where the red represents a credit, red on this one represents debits from the seller. Okay.
Oh, okay.
Sales price, $300,000. If you subtract the total payoff, you're going to come out with $97,734. So those debts that have to be paid off, the first mortgage of $195,000, the $7,000 equity loan. If you add both of them together, you get the $202. And if you subtract that from the $300,000, you're going to get this amount. This is what they're going to walk away with. All right, cool. Is that what I'm walking away with? No, it's not. You still got other charges. You got other charges and other credits coming. I'm like, okay. So the first one is the transfer tax is right here. The total commission. Now, for you, when you become a listing agent, your seller's going to say, wait a minute, I'm paying you $18,000. No, I'm charging you 6%, but half of that money is going to the other agent. So you're only getting 9,000 of it. This is the township surcharge. Okay. This is your notary. This is your broker service fee. The certification to make up the deed, and the express shipping. So this is the total closing cost that they're going to incur. But wait, there's more. Now we got credits. So that buyer reimbursement that we learned about on the first page with the buyer closing cost, our seller's now getting reimbursed for a couple months of taxes that they've already paid for. So they're going to get reimbursed for about $3,321. So let's recap. We got the summary, 300,000 right here. That's what we got for the house.
Okay.
Total mortgage payments or payoffs, 202 right there. Total closing costs right there. That's our credits. And this is what your seller is going to be walking away with. Now, if you need to change any of this, you go into revise. But if you're okay with it, we're going to save it. And then you type in the name of where you want to save it. Or I can email it. I can email it to the client. I can email it to the agent. Or I can print it. And if I print it, that means I can send it for DocuSign. So I can have the seller sign for it. Okay. All right. So what I'm going to do is, and I want you to take your time with it. I don't care if you don't understand any of it, because this is going to help us for tomorrow. I want you to do one. I'm going to have you do a seller closing cost sheet. I'm going to have you do a buyer one. The buyer one is going to be based on the information that you get from Art.
Okay.
So he's going to give you a deal that he already completed with a GFE and then complete it.
Okay.
Do not dwell on this. Do not feel like that you're going to get this wrong. I'm going to be honest with you. I want you to fail, because when people fail,
they learn.
and you learn from it, you're failing forward. Whatever you fail, in what I'm going to about to give you, you will not fail going backwards. You're going to fail going forward because you're going to understand it more.
Yeah.
And the seller net sheet, I'm going to email that to you. I'm going to give you a property address. I'm going to give you a sales price. I'm going to give you a mortgage amount, commission, settlement date, and all that good stuff. Okay.
Okay.
All right. I'll talk to you tomorrow.
Okay.
All right. Bye.
Bye-bye.